All right, let's get this party started. Tuesday, April 7th. Got about a minute and a half to the US cash session open. Markets overnight were higher, but now have drifted lower on some Iranian news. Iranians saying they are not going to capitulate to Trump, which is probably no surprise. But what a clean balance we had yesterday. Wow. We were talking about this all yesterday morning about how we were expecting kind of a normalized balance distribution for the day. And boy, did we get it. So, I mean, just briefly taking a look at the longer term picture, I don't want this to create a bias for me today, but on several attempts to rotate lower, we've not been able to find any balance, right? We have not found any agreement between buyers and sellers lower. And we made a pretty good test on Friday too, just driving all the way down to close to 6,500 and just finding nothing. And then upon testing a little bit higher, found some good balance. So generally speaking, what would I expect today? For us to test higher, right? We've tested the low, didn't find balance, came back up, found the balance. So I would expect the market to test higher, but we're going to see how this auction goes today. I don't want to get too far ahead of myself and predicting what the market's going to do. We're going to let the auction tell us what it wants to do, and we'll follow suit. All right. So generally for the first 15 minutes, we don't have any major economic releases this morning. There's the potential for Iranian headlines that can affect the markets, but no major economic releases. We allow the opening auction to settle down a little bit. 9:45, we'll start thinking about engaging the markets. So we're opening just below the POC from yesterday, just a few points below, right? Kind of in that balanced value range. So let's see if the market continues to find balance here. Does a little exploration to the high side, and we'll see what we get. But we got to be patient. We're not going to force our will upon the markets this morning. We're going to allow the auction to dictate where the opportunities and the probabilities are, and we will go from there. So I'm going to be taking a look at the volume within the first minute here. Anything less than 10,000 is a bad sign in the first minute. All right, that means there's not really an acceptance here in this area. And you're barely going to get it, it looks like. You're barely going to get it. You're a little shy of the 10,000 there. So let's see what happens over the next few minutes. See if the volume continues to be relatively anemic, because it could tell us that we're done with this area and it's time to start testing some other areas, either to the downside or to the high side. Again, I would think you would test to the high side. We've made so many tests lower in recent days. Let's see if the market now tests to the high side, but no guarantees here. Market opened at just about 630. Right there, right where the POC is now. So already we've tested a little bit higher, we've tested lower. Not adding a ton of volume here at the lows. These rotations are kind of slow for being 2 minutes into the open. Yeah, that's very slow volume build down here at the lows. Very slow. Right. And the market, if it can't find the volume, can't find the liquidity, it's going to move away from the spot. Like the market wants to rotate very fast. It wants to build the volume. It wants to find areas where traders agree on price. And this just doesn't seem to be it just yet. Oh, it's terrible to have to keep a news feed open for this. I really wish there wasn't such headlines going on in the world right now. It would make trading a little bit easier, but we deal with the situation we're given. No complaints. We just adjust and adapt. All right, but we're going to be patient. We're going to let this opening auction settle down a little bit. See where prices want to go. This is absolutely anemic down here for the first couple of minutes. Like you're very slow on the rotation, slow on the volume builds. Getting signs of sellers stepping in within value. So that's not saying much when it's within value. But I mean, I already feel like we had much better volume builds up here in the 635 region than we do down here in the 620s. But this could pick up at any moment, just let it take place. Funds and institutions are kind of testing each other out in the first couple of days of the trading week, and especially with all the headlines going on. It's just like probably everyone's a little fearful to take major positions, right? You test the waters a little bit. If the market likes it, you throw a little more at it, right? We're seeing sellers continuously step in here and try to hold down this price. So either one, you're going to make a jump down looking for that liquidity because you're not really finding it here, right? You're adding volume and you're rotating. But for the opening few minutes of an auction, this is just terrible. This is pretty slow. I don't think the market likes it here. I think we're going to move and find some other place to be. All right, it wasn't great volume up here, but it was better than it is down here. So let's see what happens. See if the market shoots back up and tests this region again, maybe tries to fill in some of the volume here within value, right? Because we've seen that there's liquidity at 630. We see that there's somewhat liquidity at 621. What about 626? Is there liquidity there? We kind of just rotated in a single rotation through there and then really come back to test it to see whether or not there's volume to be added. All right, and this was pretty good volume added on a single rotation. So my guess is for now, this is a bad low. This is probably a bad low. This is too flat. This does not look like a complete auction. We've had too much volume build here at 621. If you have volume at 621, it's logical sense that you're going to test down here in the 618, 617 region. Let me move this up so you can see 618, 617, and then taper off this distribution a little bit. Like flat tops on distributions tend to get revisited. And there you go. Right now you're getting a little more volume built. Right, but this is on the first rotation down. So let's see what happens on subsequent rotations if we add more volume here, or if it just continues to be anemic like it was up here. We drag the POC down, which means that we're finding value lower rather than higher. But again, based off these rotations and how anemic the volume is being built down here, I just don't think price is going to stay down here. I think in probabilities, not certainties. So I'm not certain that it's going to go back up. But just the way we're building volume here within the first 5 minutes of the opening auction, and we're already sub 5,000 contracts in any 1 minute span. And it should be much heavier than that. If this was a good liquid environment where buyers and sellers were agreeing that these prices were good and that they can transact at these levels, volumes would be much higher. And say now we're rotating back up. All right, now you're getting the faster flips. You're getting more volume added per singular rotations. Right. What did we just say? If we had value here at 630, we had value at 622. It's only logical sense that there's probably some value within those two areas right there in the middle. Right. And especially when you're within value, you expect very fast rotations and a lot of volume to be built. Are you getting that right there? It doesn't look like you're getting it there either. All right. So this whole value area is already shown to be pretty anemic. Now, the question is liquidity to be found lower or to be found higher? And because over the last several days, and especially last week, we tested these lower ranges and we couldn't find balance between buyers and sellers, I tend to think you're going to find it higher, or at least you're going to test it to see. So again, we're going to let this play out. I don't really have a bias, even though I'm saying like, yeah, we're probably likely to test higher than we are lower. If you find the opportunity on the short side to get up here into the 630s and it just becomes absolutely anemic, you got to follow what the auction's telling you. I do not like going into any given day with a bias saying like, oh, I only can take longs today or I only can take shorts today, because that completely ignores what the auction is telling you at the very moment. And these rotations up here are just also kind of slow. Like we're finding an entire area here where we've opened just below the value range from yesterday that is just, it's not gaining a ton of traction. Right? You get these singular rotations that add volume, but on the revisits, no one's coming in, stepping in. Get more flashes of seller divergence here within value. Since it's within value, we have to discount that information a little bit. Divergence matters more when it's outside of value. Uh, 936 headline: Iran closes all diplomatic and indirect channels of contact with the United States. Yeah, I don't think they're going to be abiding by our rules for this. Call me crazy. We have a lot more to lose than Iran. They keep that straight shut. The high oil prices will cripple Western economies. They know that. Like, it's already shit living in Iran. Like, it can't get much worse for them, but it can get a lot worse for us. That's just my 2 cents on it. Again, we're trying to, look in these low volume areas around value, around the POC, and you're just not finding much. We have not really seen buyers step in here to diverge the price with contract flow, but sellers have been willing to step in, at least within value. Still kind of slow on the rotation, slow on the volume builds, kind of just working around. There's no major economic headlines this morning, right? We're only going to be worried about Iran headlines, and we can't predict those, so we don't even have to worry about that. If the opportunity presents itself, we take the trade. And if we get screwed by a news release, we get screwed by a news release. There's nothing you can do about that. So the volume here at the lows is just anemic, right? These rotations are so slow. If the market was really interested in staying down here, you get these like little faster rotations. So you're getting a little bit now, right? You had a little bit of a faster rotational build there at the bottom. And volumes look like they're picking up a little bit. You're finally seeing the flashes of the divergence by the buyers, right? But look how many contracts are being added per singular rotation. Like 20 contracts per rotation. That's pretty anemic for the SPOOs. All right, I'm still looking for this test higher. We got 940. I generally want to give this at least 5 more minutes before I start engaging. But if we come down here and test these lows here soon and the anemia continues, we see more divergence on the buy side, I probably definitely want to take a long here. But what I don't want to see is the quick rotations and a lot of volume being built here at the lows, right? It's okay if we extend the range of the distribution, right? We're just fishing for the liquidity, looking for it. But what we don't want to see is right at the bottom of this range, the quick rotations and a lot of volume being built very quickly. All right, that negates our thesis of a potential long this morning. So we're barely extending the ranges. We're not getting the super fast rotations. You're getting decent volume built here, though. All right, there's still enough volume here where we're not really going to say, hey, let's be long here. We do get the flashes of divergence outside of value near the range low, which is a good sign for a long. But we're still a little too early. It's only 9:41, soon to be 9:42. I mean, we have a great target. This is your target. If you're shooting for a long, that's your target right there, 627. And you'll move your stop there at 619. Yeah, I mean, I'm tempted, but I have to follow my rules. I generally allow 15 minutes in the opening auction, but I mean, this is pretty anemic down here. We're very hard to build volume. We have favorable absorption on the buy side, and you're not seeing the seller absorption until all the way up here at 624, right? Still thinking that this is the area the market's going to want to visit and see if it can fill it in a little bit, because we saw in the earlier rotations, as the market opened, there was some decent volume up here. Okay, and we've tested lower. We're not really finding an agreement between buyers and sellers. Like, I want to be patient. I don't want to just jump in, but I mean, this is pretty anemic right here. Like, I generally hate taking a trade like right at 9:45. Like, I'm like just waiting, and as soon as the clock hits 9:45 to jump into a trade, that tends to be a little impatient on my end. And if the market leaves this area and goes up here before 9:45, it is what it is. We follow the rules as they're set out. And we allow the open and auction volatility to die down before we engage the market. You're still getting the divergence on the buy side. That's a great side if you want to be long here. All right. And so we'll attempt this area first. And if we can't find the volume here, if we don't get quick rotations, a lot of volume being built, the next logical place to try to find volume is going to be up at 627. But that's not to say like this doesn't just shoot down and then find volume somewhere down here, like 608 or something. That can happen too. Again, we think in probabilities, not absolute certainties. So let's see what happens if we're close enough now. We've got 1 minute until it's 9:45. Let's see what happens if we rotate here back outside of value. I mean, ideally, we want to be down in like 613 for the trade. Getting decent volume being built on that rotation. I mean, and we're still pretty anemic down here. 216 to 233, 242. You know, 141. That's. We see more flashes of buyer divergence. The volume, it's borderline right now. It's really borderline. Like I want to see less than 20 contracts be added per rotation. You're getting a little more than that. And especially because the market's not just like attempting the rotation down and then immediately rotating up. It's kind of just rotating within this area. Yeah, I mean, see, and then you barely extended the range. See, there's enough volume being built there. You have to pay attention, right? And you have to wait for pure, like what I call it, like pure anemia, right? The market rotates and then it can only add like a handful of contracts. And when I say a handful, I'm like, we're talking like less than 20, better to be 5. Right, we had decent rotations here at the lows, okay? But those were unlike the first rotations. You saw more divergence with the buyers stepping in, okay? I am willing probably to put a limit order in so long as the volume can dry up. It's not drying up enough. It's just not doing it. Like, I like the idea of being long, right? For all the reasons that we've explained. You know what? Let's do 611, limit buy. Okay. Your stop is going to be at 06. Okay. We're in a, oh, gotta turn it off. Okay. First, we're going to move the stop at 8. That might be a little high. How about 7? 617 will move the stop. So I'm going to update my log and then trade at 946. I'm long at 11, 6611. Stop loss is 6606. Take profit is, let's do 6626. All right, we're kind of looking for a pretty big move here. So I'm going to grade this probably a 7 out of 8. But I'll do an official grading later. And then we'll move the stop at 1.7. If we get up to 1.7, we'll move the stop to break even. But not to say that this market doesn't shoot down and find more liquidity. It could absolutely do that. We've got near the lows. We've had slower rotations. Was it purely anemic? No. All right, might get stopped here. And it is what it is. I like the probabilities of this trade. I do. But we're adding a lot of volume down here. Yeah, and we're failing to rotate up. Yeah, we're going to hit the stop for sure. But we're not going to scratch the trade. And just let it hit the stop and then get ready to cancel the rest of your limit orders. It is what it is. Yep, stop hit. All right. I still like the thesis of the longs though. So we were out of that trade at 948. And we were out at 6606. Let me just check the order log to make sure we didn't get slippage. Nope, we were out clean at 06. Okay. And you're getting divergence, seeing some sellers stepping in. The rotations still here are kind of slow. I mean, we might re-engage this. But the fact that we're seeing flashes of the seller divergence, not getting any more flashes of the buyer divergence down here. We had it up here at 611, but we don't have it down here at the 06. So I'm not willing to re-engage just yet, right? If I get flashes of buyer divergence down here with the slowed rotations this far outside of value, we'll take it long again. We'll try it again, right? But I also want to be patient, right? It is only 9:48. There's no reason to try to execute like all of our trades within the first few minutes of our trading session. But these rotations are so freaking slow. Yeah, I'm almost ready to pull the trigger again. We're just not seeing the volume being built down here that suggests to me that you're going to drastically extend this range to the downside. And then distribution does look like it's tapering off, right? You're starting to see the taper. And it's looking pretty clean other than this little section right here at 09. So let's see if the market rotates back down into the 06s on anemic volume. If you get the rotations back down into the 06 and no more flashes of divergence on this on the sell side, it's an okay trade. Yeah, I think we got to take this stab again. Right? I think we're seeing enough anemia here. And then I think we'll do okay, give it a minute, give it a minute. Let's see if it extends the range again. 230, 240. Yeah, I'm going to be willing to hit this again now. I am. I might hate myself for doing this, but limit order at 06, and it's going to probably take off without us. I mean, it's so anemic. And then the stop will be at 01, right? But if this gets too far away from us, I will cancel the order. So right now the limit's in at 06. Getting flashes of that seller divergence. That's not great. I want to cancel now because of that, right? This is just outside the value area low. And you're getting the flashes of divergence, and now you're getting it again. And without having it also on the buy side, you can't go long into that. Yeah, you could easily break them, right? This is anemia down here. This is slowed rotation, slow volume. But unless I see flashes of divergence on the buy side, it negates the trade, right? It turns from like an A to a B trade. And I don't want to take it. Right? I want the probability stacked in my favor. And we have most of what we need for our long trade here. Right? Our stop on the first trade was at 06. Like it wasn't that far below our stop that we got stopped out. The rotations are slow. We're out of volume. Value. It's hard to build the volume here. We're near the distribution edge. Like that's like what I call the core 4. Right? But it's the additional things. Are we outside the value range? Yes. Do we have a good low volume target area? Yes. Do we have opposing absorption? Yes. Do we have favorable absorption at our back? No, we do not. Right. So if we miss this and it shoots up in here into 619, where I suspect would be a great target for the trade down here from the lows, all right, these two areas. This is your first target, and that would be your second target if you were to split it apart. So ideally, what I'd want to see now is another rotation back outside of the value. No signs of seller divergence, right? Because we kind of broke them here. They could be stepping in up here. But I want rotations back outside of value for the trade. See, and you're getting more flashes of seller divergence. So we don't necessarily want to trade into that unless we also have buyer divergence. If you're in value and you have seller divergence working against you, that is not a trade. That is not a good trade. All right. Value is where all the liquidity is. So let's see what happens as we rotate back outside of value. Does the volume die down? Right. You got the flashes of the divergence, but are they really, they're not really holding it yet. If they continue to hold price down here, they'll hold it. So yeah, and they're not able to hold it. Yeah. I got to imagine we're working up into this area. And there you go. There's the work up. What are you going to do? Right. It's one thing to know exactly where the market's going to go. It's a completely different thing to be able to trade it well. And that's the crux of good trading, is being able to trade your reads well. Right. And so you're finding better volume up here. You're getting a little bit of the quicker rotations, more volume built per rotation. This area's filling in. We don't chase this, right? Even though we know there's another area here that the market may want to visit today. Right? This is almost the complete opposite of what happened yesterday, when we kept on testing the highs up in the 650s. And I kept on saying, like, there's no volume up here and there's no rotational speed, and that there was volume down at 620s yesterday. And then the market for the rest of the afternoon went down into the 620s to fill in that area. It's the same thing that's happening again today. It's just in the opposite direction. Market went down to the lows, extended the range, rotated there several times, didn't find the volume. And then now it's rotated up. It'll continue this rotation up. It will test 627. Seller stepping in within value, so we don't weigh that information too heavily. So right now, there is absolutely nothing to do. Once you're within value and once you're around the POC and you get these rotations back and forth as the market really tries to finish out finding all the liquidity, there's nothing for you to do. Like, you can take your hand off the mouse. You can just sit back with your arms crossed and relax, because we pay attention. We're focused like a hawk on the market at all times, but we're acutely focused when it gets outside of value, right? That's when we really need to pay attention, right? And start actually seeing exactly how many contracts are added per rotation, right? The market's just going to flip back and forth here, trying to determine whether or not all the liquidity is dried up here. But we're seeing a repetitive theme here this morning of where sellers are kind of willing to step in, and that's up in this 620 region. Above 620, it seems that sellers are willing to step in. They're getting a good price. They like it. And we only saw buyers step in once down at 610s, 611s, which was part of our trade thesis for going long at 946. But they have disappeared. They did not step in at 605. But having said all of that, the primary thing that I look for in determining where I think markets are going to head to next is volume and rotations. That's all it is, right? If the market likes the area that it's in, if there's a lot of liquidity, the market rotates very fast and adds a lot of volume very quickly. When it doesn't like the areas, when there's not a lot of liquidity to be had, the market rotates very slowly and it's hard to find volume, right? You're getting some pretty decent rotations down here. This is not a long. And you have sellers stepping in, trying to drive price back outside of value. But even if sellers try to drive this price lower, if they don't find liquidity down here, there's nothing they can do, right? You don't want to continually just sell, sell, sell and keep on getting worse and worse fills. They'll back off, right? They sell down this region and then they see that no one else is willing to take the other side of the trade, right? Because buyers will say, hey, like, why should I buy at 606 when I can buy down at 600? Like, I want confirmation down here that buyers are willing to step in, and you're getting the flash of it. Okay, now let's confirm this with slow down rotations and slow volume builds. Again, flashes of divergence again. You only had flashes on the buy side, and then you got the flash on the sell side. Like, I really want to take an A plus trade down here. And what I need for that A plus trade is the buyer divergence and lack of seller divergence. That's A plus. Can I take a trade outside of value if there's a posing divergence here? You could. You're probably still favored greater than 50%. I'm not going to do it. And now that this seller divergence has held and it's right at the value area low, unless I get buyer divergence that holds, we do not take this trade. Right? Because they've shown to me that they're willing to defend this level, and then we're going to try to trade through it when there's been no signs that buyers are willing to hold these levels. The probabilities fall off. Right? We want to stack the probabilities in our favor. Trading back towards value makes it high probability. Trading from outside of value makes it high probability. But the divergences take away from your probable outcomes. And see, now we're extending the range. Because again, buyers have not been willing to step in here. Not yet. Not that we've seen. They've shown hints at it. They've thrown some contracts at the market, but they're not holding anything. And you're getting pretty quick rotations down here at the lows. There's the buyers. Right, but these rotations are very quick. We're adding a good amount of volume down here. Right, market could potentially break down here a little bit because this is right at the lows. When you get the market that rotates very fast right at the lows, you can expect a break. And you just got that. You just got that little bit of break. A lot of volume built on the single rotation. Right, this is now very unclean at the bottom. Right, you don't have that good taper that you're looking for now. All right, so we're not really entertaining a long here as much as we were 10 minutes ago. All right, based on what we've seen, the sellers followed the price lower. They were able to diverge the contract flow with price. We're getting quick rotations and a lot of volume built right at near the lows. That's not good signs for longs. That's just really not. And do we chase it? Absolutely not, because we're now trading away from value. Unless the value area gets dragged all the way down here, which you're going to need to add a lot of volume to do that. It's a no trade situation at the moment. We've taken one stab so far at 611, looking for a long up at the 627 area. And we got stopped at 06, right about 946 on slow rotation, slow volume builds. It was a pretty good trade. It's a pretty good probable trade. I liked it. But now you're starting to see a little bit of the slowdown in the rotations down here. Still adding enough volume, though, that you're probably going to extend this range a little bit. But we've seen no hint of buyers stepping in here, right? If we want A plus trades, you're going to need to see that. You want the divergence at your back. And you're just getting more flashes of on the sell side. Excuse me. All right, extended the range just a little bit. What we need to see for a long here is we're going to need to see a drastic slowdown in the volume being built here at the lows, slower rotations. And then the icing on the cake is going to be buyer divergence without signs of seller divergence. And we'll be trading from out of value back towards value. All right, that's a great trade. But we just don't have nearly all the elements to justify that. And as much as I love just to, place trades and just like be in the market all the time, you got to wait. You got to be patient. Wait for the probabilities to align and then get in on the trade. Follow your process. Get upset if you don't follow your process. Don't get upset about P&L. If you stick to your process and have a good process and a good edge, the P&L will come. And you still got the signs of the seller divergence there up at the 600s. All right. all this business is being done on the offer. Right? This is not two-way trade. This is people attempting to buy, and then sellers are just refilling the limit orders, right? They're continually offering price. And so buyers aren't getting anywhere, and they haven't stepped in any meaningful manner for us to even consider a long here. They're just not there yet. All right, and this is just not a clean taper. The cleaner the taper, the more probable it is that the auction is complete. Right, and you're getting pretty right. This isn't quick rotations here at the low. Right, if you're going and adding volume really quick here at the lows, you'd probably see another further breakdown. And what these rotations tell me is that you're going to barely expand the distribution edge, right? You're just testing outside to see if there's more liquidity, but you're not finding a ton of liquidity down here. You're just not. Not to say that you're not going to find it somewhere buried down here, but as of this moment, the sellers are pushing it down and they're not finding a lot of business down here. Yeah. I mean, it's just slow down here. It's really slow down here. I'm getting a little pickup there. But again, just be patient. I mean, this seller divergence here at the lows is just prohibitive. This isn't a short. It's not a long. It's not anything. It's just watch and sit with your arms crossed for right now. There's nothing here. I mean, the volumes on a 1 minute span are still remaining somewhat decent. We're still over 3,000 minimum. So that's not bad. That's not bad volume for 1 minute spans. Once you get below 2,000, market's not going to stay there. Like 2,000 is like the cutoff per 1 minute. The market is here to facilitate trade, complete the auction. And if it's just not auctioning, there's no volume to be had, participants will move the market away to find those spots. Right. So this isn't like a complete breakdown. This is just extending the range a little bit. We're just doing a little price discovery here. A little quicker on the rotations, a little faster on the volume builds. And we're getting some decent volume here, right? Like the market is going to move away from these spots where it doesn't find a lot of volume. And if the seller pressure is enough, it'll break down. And that's what you got. And so we'll see. And pretty good, pretty decent volume builds on these rotations lower, just outside the distribution range. It's not bad, right? We're still looking for that bottom. This is not the bottom yet. I don't think we found the bottom yet. But buyers are just absolutely absent today, right? And without them, like how are you taking longs? You don't really seem to be able to. And so that's why after 946, we've just kind of been sitting here with our arms crossed, right? We were hoping for longs because we're just so far outside of value. On the low side is like, if we want to take a probable trade, we got to take it up back towards value, and value's up at, above 6,600 now. Is it possible that we drag the POC all the way down here? Yeah, it's possible. But I think you would need to see volume building a lot faster in this market to be rotating a lot faster for it to do that, right? POC volume is all the way out here, right? That's how much volume you need to build all the way out here to drag this POC all the way down. And sometimes the market does this. It barely extends the ranges, adds just enough volume to keep it interested and going lower. right? And the volume just, it never dries up enough and the rotations never slow down enough to give you an adequate long, and the buyers will never step in. And it's just a gradual breakdown in price. All right, these are pretty good volume numbers for 1 minute spans. 9,500. I should probably have my news open again. I don't see any other additional headlines since 9:36. Right, but not very fast rotations here at the lows. You're getting decent volume built, right? You're gonna extend these lows. This is probably not the low, but you don't really seem to be finding balance here, do you? Right? Like this may eventually fill in and create like a little normal distribution here around 586 or something, right? With the POC like somewhere in this region. But the market's just like, it's kind of fishing again, and it's been doing this for the last week. Like it fishes lower, it tries to find a balance between buyers and sellers, and it just doesn't find it. And then it rotates back higher. So nothing to do at the moment. This is still too quick on the rotations, too quick on the speed. We've seen no buyer divergence whatsoever. And the only reason that we maintain a bias towards longs right now is because of where value is relative to price, right? Value is still up. The POC is still above 620. Despite all these attempts lower, you have not dragged value lower, right? Which lends credence to the idea that we're fishing. This isn't an agreement between market participants that prices should be lower. We're fishing. Right, but if market fails to rotate above 6591, that'll be a little bit of a tell that this might become a balanced range. But we've tested here before. We tested this region on Friday. So has the world outlook changed so much between Friday and today, Tuesday, that prices now should be balanced lower? Maybe. I don't know. Right? We just read the auction, let the auction tell us what it wants to do. And we always want to trade back to value. That's where the probabilities are. That's where you start stacking the probabilities. And then you start adding all these things like lack of opposing divergence. You have supportive divergence. You're outside of value, right? Those what takes B trades and turns them into A plus trades. Right? If we come up into this region and we don't find anything, right, then it's more likely you're going to find balance down here. Right? But this was done on a singular rotation down, right? We have not come back into this area to test it. You're seeing flashes of the seller divergence in that region. And we are close to flipping value down, right? We're pretty close now, right? Volumes out there. Yeah, you're not that far off. Probably spend 10 more minutes here. You'll be able to flip value down. And what does that mean for us? It means it gives us more opportunities, right? The seller divergence here has been persistent and brutal this morning. Like even though when we originally were testing like down here and the 11s and the 10s and we weren't finding much, the sellers just stepped in and drove prices lower. They didn't really care that whether or not buyers were there to balance the price out. They were willing to accept lower prices. And when people are willing to accept worse fills, that's saying something, right? Because they don't think they're going to get a better price. And what we're looking for as we come up into this low volume area is for the market to spool quickly, rotate very fast, and add lots of volume. That will be acceptance. But as of this moment, the rotations are very slow up here. We're having to say now we're dragging value lower. Okay, so now you really don't have any potential for a long down here as of right now, unless you drastically extend this range. Okay, because you don't want to take a trade at 582 and then have the POC right at 588, right? Then you're going to have to trade through that where there's been a general acceptance amongst market participants that's saying like, hey, we like this area. We're going to keep price in this area. And if you long to hear, like your target is literally right there. That's bad risk to reward. And we repeatedly see these sellers stepping in. We've seen no buyer divergence outside of 945, which led us to our one long trade so far this morning. So if value is being dragged lower, we want to see the value area high, which is still up here at 615, just above, to start being dragged down lower and align with a point of interest on this distribution, like a ledge or an edge. Okay. So if we can get like the value area high to drop down here towards 601, that's a good ledge. That's a good ledge to trade. Right? You want to trade from structure if you can. You don't want to trade right in the middle of distributions with broken structure. But rotationally, this is slow. Look how slow that is. You're barely ticking up and down. Right? The market will move away from this spot, especially if it continues to get such anemic volume. Right? It's finding a little more up here. Yeah, rotationally, it's a little more accepted up here than it was right here at the POC. But you can expect around the POC, the market just to kind of drift back and forth to make sure all the liquidity is dried up here. All right, you finally got a flash of the buyer's divergence, right? I think that was the first flash that we've seen since 945. Is it tradable? Nope. Because we're now above the POC. And you always want to be trading back in the direction of the POC. Like that is essentially your bias for the day. Is where is the point of control? Where's the mean of the distribution? Let's trade towards that because that's where the probabilities are. We're not hunting patterns. We're not drawing trend lines. We just literally the numbers tell us what to do. Right? How is this auctioning? Is it being accepted or is it being rejected? You don't trade the level, you trade the acceptance and rejection of the auction. All right, well, while we're sitting here not doing anything, get another flash of the buyer divergence. We can't long, you can't short. There's nothing you can do. Just watch it. Much better volume being built here. See how much faster the market is rotating and adding volume? More acceptance here than you were down here. Is this the low? Probably not. Right? That's just very bad structure down here. Could it remain that way for the day? Yeah, absolutely. The market is just going to go find the liquidity. It needs the liquidity. It's got to facilitate trade. If it doesn't find the liquidity, that's not what the market's purpose is. And rotationally, you slow down as you're trying to come back into this region. I'm going to go use the restroom real quick because I don't foresee anything happening in the next couple minutes that is going to really change my narrative for the market thus far this morning. I don't think the value area high has drifted lower, really. No, I mean, barely. It might have moved a tick or two. That was it. So, because we're within value right here and we're just going to kind of rotate, try to fill in these areas, see if the auction is complete. There's nothing for us to do but to cross our arms and wait. So, I will use the restroom break real quick and be right back. So getting more flashes of the buyer divergence down here at 590, right above the POC, and not tradable, unfortunately. You gotta let this auction develop more. But look at the slowed rotations here and the lack of volume, right? There's nothing here. There's nothing here. All right. So the question now for the market is, are we going to find liquidity down here? Or are we better? Is it going to be easier to find liquidity up here at 603? All right. The seller stepped in repeatedly around 591. So there they are stepping in again. All right. But buyers have also been willing to show to step in here at the POC. I had to think, all things considering, we're much more likely to go up to 6603 than we are to revisit the 582 lows. Just based off how this is auctioning, we didn't find a ton of activity here. We're not finding a ton of activity here. So the next question becomes, hey, can we get some activity up here? All right, because we still only rotated through this once. Nah, he probably got more than one rotation, right? That was an immediate sell-off. So let's see what happens. See if my thesis is correct. It's not tradable though, unfortunately. Because anytime you're within value, you can get a lot of volatility back and forth. Buyers show up, sellers show up, right? They refill their limit orders. That's what causes the divergence because they know there's liquidity here. See, and now you're going up to 603 to test that area. Markets are easy to read, hard to trade. I wish it was easier, but it is not. And I keep on getting alerts for Pokemon cards, which is not helpful this morning. Not now, please. And so on the initial rotations up, you found volume. You hit those limit orders that were just resting there, but on the subsequent rotations up, you didn't really find much. Saw a flash of the buyer divergence, willing to follow prices a little bit higher. Right, so we've broken some seller divergence. Sellers gave up here at the lows, and then the buyers stepped in. They were able to break them at 590. Better rotations, more volume being built up here. Value area high is drifted below 615, but look where it is. Right, like the only place you can really short based off this structure right here is probably up here in 624. Shorting in here, that doesn't look like good structure to trade within. It's very jagged, it's very broken. The market could easily find liquidity in these areas. This looks like more of a completed auction. The taper is a good sign of a completed auction, and that's where you want to trade from, complete to incomplete, low liquidity to high liquidity. That is the crux of the edge. Who knows? Maybe we're done going down for the day. I don't know. This does not seem like a good low to me. This seems like a better high. And you're still finding some liquidity in this low volume area here within value. And then you get a little slower on the rotations as you get down into that area. The expectation is when you're within value and you visit these low volume areas, like these dips in the distribution, you expect the market to spool very fast, rotate very fast, and add lots of volume very quickly. Are you getting that? You're getting a little bit. This is a pretty good volume build right here. Price might stay here for a minute. There seems to be enough here to attract the market. Unless the buyers just take it right out of this area. right? Sellers have not really re-engaged, right? They allowed 590s to be broken. Buyers have stepped back in. They stepped in right below 590, lifted it up. Now they're stepping in at 600. But none of this has been tradable because we've been in value for quite some time now. Right. Once we were down here, the value area got dragged down and the POC got dragged down to 658 or what, 650, 6588. So now we got the POC to flip again. Okay. So what does that tell us? We initially had the POC higher, it flipped down, and now it's flipped back up. Okay. We found very little volume down near the old POC. Like the market was struggling before it left this area. Okay. You got buyer divergence down here. So now we have more opportunities. The market has opened itself up for more opportunities. The opportunities now are outside of value. Okay. We have now a much better chance at getting long than we do short based off where the market is because we need to get down here, potentially somewhere in here, right? I'd be willing to take a long somewhere in here. The closest spot I'm willing to take a short is all the way up here at 625, and we're at 608. And now you finally get the sellers to step in a little bit. So maybe we find balance today lower than yesterday. Absolute possibility, right? Because we're now discounting the news that Iran is just not going to negotiate. Right. And so the price is now settling lower. That could be the entire crux of the day right there. But we're patient. We're waiting to see what the auction can give us. Hopefully, we get another opportunity for a trade here. We swung and missed on the first one, but it was a good trade. It was good probabilities. I liked it. And we saw the market shoot up not long after we took the trade. And it's just we got stopped out before it did. It happens. We don't dwell on the profit and loss. We dwell on the process. If we don't follow our process, if we start breaking rules that we have for ourselves, that's the problem. But when you follow all the rules and you just take a swing and you miss, there's absolutely nothing wrong with that. And that's what happened this morning. It was a good trade. We just swung and we missed. And you get a little slow as you move down into this low volume area. All right. But we saw that sellers were willing to step in here above the POC and drive price lower. But all the levels that the sellers were trying to hold so far this morning on this way down, they tried to hold 6,600, didn't do it. They tried to hold 6,590, didn't do it. So the sellers now have capitulated twice when the buyers stepped in. Okay. Like if you just traded slowed rotations and slow volume builds, like you're almost building a case for a long here, but that's not all that we need. All right. You're getting a little too much volume being built on these rotations right here at 604. So the market is likely going to dip a little bit lower. Yeah, you're probably still going to dip a little bit lower. There's enough volume here and enough rotations. And when I say enough volume, I mean, once you start getting over 20 contracts added per singular rotation, right? It ticks up, adds 20 contracts, ticks down, adds 20 contracts. Once you have that, like that, generally that's enough liquidity for the market to say, hey, okay, there's still more people interested here. But the times when it rotates and it adds less than 5 contracts, sometimes it doesn't add any contracts on the rotation. Like that's a telltale sign that the auction is complete and the market is not just finding the liquidity that it needs there. And then that's a tradable event. Right? Your job as a trader with this edge is to provide liquidity to market participants. When there's no liquidity, you are in fact going to help drive the market back towards liquidity. In reality, are you personally driving the market as a retail trader with your MES contracts? No. But the big market participants, the funds, the institutions, they'll be doing the same thing, right? They need to transact hundreds of millions of dollars in their positions. They need to load their books, offload their books. They have very big positions, right? They need liquidity. They need someone on the other side to take that trade that doesn't adversely affect price for them, right? Anyone can come in and buy 1,000 contracts. But if there's no one offering 1,000 contracts for you to buy, you're going to rocket ship the price. You don't want to rocket ship the price because you'll get worse and worse fills. So got a little more speed on the rotations. You moved up a little bit. Just still working this low volume area. Right, no trade. Ideally, we want to see the value area high and both the value area low start to compress and give us wider ranges out of value for in which we can trade. But we've been stuck in value for some time now, and this is not a tradable event. You will get chopped up placing trades within value. It'll be stopped out repeatedly. It's a very low probability environment, right? Because this is where the market is finding liquidity. It's around the POC and it's within value. This is a 68% value range. Okay, it's statistically significant. Away from the mean and the POC, we're looking at about one standard deviation. If this is a true distribution, prices will want to stay in the middle. And looking at how the distribution is forming today, this isn't a trended distribution. You're not going to get any major break to the upside or the downside. Again, we talked about earlier with the news and the headline risks this week. Are institutions and funds willing to bet the farm on a single direction for S&Ps? Absolutely not. It's just fishing. They're fishing around. Where is their liquidity for my positions? They're not taking really directional trades. This isn't the environment for it. There's too much risk. All right, buyer, seller stepping in at the POC, hold and price down. But when it happens right at the POC, it's not that big of a signal, right? You'll get absorption on both sides around the POC and within value. So when you get outside of value, that's where the tell is. And when those levels break, that's when you know. And this is why you just can't trade absorption between contract flow and price. You'd be taking trades left and right, especially within value. But wow, how boring has this market become in the last like 15 minutes? Just rotating around the POC. POC started up, moved down. Now it's moved back up. Not as high as it was originally, but we've moved up. So it's likely just going to be a balanced range day again. But you kind of expect that with all the headline risk. Like people are just filling in the liquidity where they need it, but not really getting directionally involved. Still tradable for us. But unless we really get outside of value or towards the value edge, you can't really engage us. And you're definitely not engaging this around the POC. Anytime the price is right near the POC, just sit back, cross your arms, and watch. Watch the rotations, watch the volume build. Nothing for you to do. I mean, ideally, we get a rotation outside of value down towards 597, 596, right towards that value area low. Because this taper right here in this structure in this low volume area is tradable. You can absolutely trade this, and you kind of want your stop below that low volume area. Ideally, you want your stop at 591, somewhere in this range. And if you do like a 5-point stop, that means you need at least 596 on your limit order. But again, getting way ahead of ourselves now that we're still below the POC and up here in value. Those are just dreaming scenarios. That's what we dream and hope for. We repeatedly see buyers trying to step in here at 6,600 and hold up price. That's essentially where the sellers were able to hold price down earlier in the session and then capitulated. Yeah, I mean, like, look how jagged this is. There's no smoothness to any of this within value, and the rotations are slow around this POC now too. Right. I don't think the market's going to stay here. I don't know if we're going to find balance. I don't know. All right, moving higher. Finding more liquidity. Right. It'll test these little low volume areas within volume, but this is pretty clean up here. I mean, we speculated this morning around like 9:45 that this area was more desirable for the market than running lows. And then the market proceeded to run the lows. But as price comes down and if it dries up again around the POC, you can expect another move higher, but not tradable. It's one thing to read the market and know pretty much exactly where it's going, at least with high probability. It's a completely another thing to be able to trade it. And market, it's adding volume, but the rotations are pretty slow here, right? It's not very exciting. Flashes of the seller divergence, trying to hold it around the POC. That's where the liquidity is. Yeah, that was a pretty good addition right there. All right, now you're finding more volume. All right, that's acceptance right there. All right, these fast rotations and a lot of volume being built, so that's acceptance of price. That's what you're looking for when you're in a trade and going in the direction of your trade. That's what you want to see. Very quick rotations and a lot of volume being built. But then it seemed to have dried up pretty quickly. But again, you get volatility around the POC and around the mean of the distribution, which goes back and forth, looking for the last remnants of liquidity. It's like, hello, anyone at 605? Anyone want to trade? Hello. Okay, no one. All right, let's go test 610. Anyone? 610, 610. All right, it's an auction. Prices are being bid and they're being offered. Seller stepping in at the POC, but again, we're right at the POC. It doesn't really mean much. If that was outside of value, that would be helpful. Same thing on the buy side. Any sort of divergence around the mean and the POC, it doesn't mean anything. But the market, this auction is just, it's not giving you another opportunity. It's just not there. Oh. Then we don't change our methodology or our strategy based off one day's trading results. The shot that we took at 946 was absolutely reasonable. It was a good probability trade and just didn't work. Nothing you can do about it. And so we just become patient. We wait for our next opportunity. We're not looking to make our money back or something today, right? Each trade is individual of the last trade. Last trade's probabilities has no effect on future probabilities. We're not going to be hesitant to take a trade just because we've already had one loss today. And we're not going to be overly eager to take a trade because we had one loss today. We are emotionally neutral. We play the edge as it is, not our emotions. Good trading is boring trading. So again, some more headlines. Iran cuts off direct diplomacy with the U.S. from the Wall Street Journal. Iran cut off direct communications with the U.S. over Trump's threat to destroy Iran's whole civilization Monday morning. Oh my lord. The White House denies Washington's intention to use nuclear weapons. And oh my god, what kind of a headline is that? You're gonna nuke Tehran. Oh my goodness. I mean, all those news headlines, I mean, does not make for an ideal trading environment. We wish they weren't there, but they are there, and that's the market that you're given, and you got to work with it. If a news headline comes out and just absolutely destroys your trade, it destroys your trade. There's nothing you can do. You cannot predict the news headlines. And algorithms will trade based off that information. But we're getting pretty anemic here around this POC. So now the question is, where is the market going to move to next to try to find the liquidity? I don't know. The lows don't look good. All right. Been speculating that we might revisit those lows. We'll see. I would just like us to get outside of value somewhere, or at least give us a glimpse of an opportunity. Because right now, there's no glimpses of an opportunity. You're just hovering around the POC. There's nothing you can do. It's as volatile. It goes back and forth. Taking a trade here is gambling. Flip a coin as to which direction it's going to go. We don't flip coins here unless they're a two-sided coin and we know what side wins. The rotationally and the volume is just so slow here around the POC. All right, market is not going to stick here. All right, you had a little bit of a range expansion on the last minute that added 4,000 contracts, so that was better. And the volume was found down here, not up here. Pardon me. Big yawn. And the market just rotates around the POC. This is what it does, looking for the last remnants of liquidity. And there's nothing for us to do, even with buyer divergence. So it's not a long. It's just not. Even if you thought that prices were going to go higher and we're going to, try to fill in maybe these areas up here in 620, 616, test those areas. I mean, you can easily test down here now too in 602s. And this is a pretty flat low, which means that it's likely to get revisited because the auction's not complete. Auction completion looks more like a taper. That looks more like a complete auction. In the 625s, this is not a complete auction. It doesn't look like. Does it mean necessarily we're going to go lower? Absolutely not. We're just narrowing in around the POC. Volumes are dropping off a little bit. You might actually get below 2,000 on this 1 minute span. You'll probably get just above it. But you had just above 2,000 on the last 1 minute span. You're just now going to get another one above 2,000, which tells me that the market is getting ready to move away from this POC. Liquidity is drying up. There's not a lot of business to be done here. So now where do we go from here? If we go lower and we get outside this value range down at 595 and we also don't find liquidity here, that's probably going to be a great long trade because you can actually target the value area highs if there's not a ton of liquidity here, right? You get enough distance in between this and this, right? Well, you'll be able to move your stop well before you get to the POC. But we need some things to happen first. Again, the fact that sellers are stepping here near the POC doesn't really mean much. But we did just say the price is likely going to leave this POC range, at least this range right here, because there's not a ton of volume within this range right here. So is there more volume down here? Is there going to be more volume up here? The market's going to go test those both areas and find out. And it's going to be attracted to the area that provides the most liquidity. Because to facilitate trade, which is this market's job, you need the liquidity to do so. My goodness, is this boring? And that's the market sometimes. Sometimes the markets are absolutely boring. You just rotate around the POC looking for just the last little bit of liquidity, and there's just absolutely no trade to be had. All right, you look for those opportunities where you don't have much risk, and then there's potential for great reward. And when the probabilities are in your favor, those are great trades. Those are the trades you want to take. So let's see if we can get down towards the value area low. All right, we want to see buyers stepping in. We want to see the rotation slow down. We want to see the volume taper off. And the bonus is supportive absorption behind you on the behalf of buyers. But you're still far away from that, unfortunately. Now you're moving back towards the POC. Say just rotating around the POC. For me, no edge to be had here. There's no edge. That's unfortunate. Because we got about 10 minutes left to consider taking trades. And we've been in this area around this POC, this 6605, 6607, since 1022. It looks about, yeah, 1021. So we've been here for 20 something minutes. And the volume is not gangbusters. We're going to move away from this area. There's not enough liquidity here to be attractive to the market. So it's got to go find another spot to facilitate trade. It only takes one part. When there's low liquidity, it just takes one smaller participant to move the market. I mean, it's the impatient guys like, oh my God, there's no liquidity here, or I need to buy it until we get more liquidity. Ten 40 seconds. Yeah, you might finally get sub 2,000 on a 1 minute range. Close. You'll probably be just above. Yep. But again, having 2,000 contracts or less per 1 minute span, that's pretty anemic. Markets will not want to stay there. And could you be long or short here? Absolutely neither. You're just flipping a coin. It's just going to rotate back and forth around the POC to make sure all the business is done. It looks to be cleaning up this taper, right? Other than this little hiccup at 601 area, like this is getting pretty clean. That's pretty clean right there. Now you rocket ship higher. Rocket ship. Quicker rotations, more volume being built. Notice the difference between down here, what you're getting, and what you're getting up here. Right, there was a little more acceptance up here. More poor structure that potentially can be filled in. And then price moved right back below the POC. Hilarious. Just rotate around the POC. This is why you don't trade anywhere near the freaking POC. Because if you did, you'd be getting false signals left and right. You got to be patient. Wait for the opportunities to present themselves. Absolutely patient until we no longer need to be. And then we become decisive. So sellers are trying to step in again. They look to be consistently trying to hold this POC. All right, they stepped in at around 606, and it looks to be at the exact same price as 606 again. But divergence around the POC and when the center of the distribution, it doesn't matter much. Unless it's so repetitive and consistent that it's just absolutely overwhelming and you can't ignore it. But this you can kind of ignore. But still no tradable events that are one shot at 946. Took a long at 611, stopped at 606. right? That was the last time we had any good opportunity from outside of value to trade back into value and towards the POC. We had the slow rotations. We had the minimum volume being built. We had favorable divergence. Right, there was no real signs of seller divergence. Pretty good trade. And then again, coming back down here, how slow these rotations are, how slow this volume is being built, right? How much faster were the rotations and the volume being built up here? So market, why are you come down here look for liquidity when you just saw there's plenty of liquidity up here in the 612s? I would not be surprised if the market now rotates back up. Because we're just not finding much of anything down here. So unless a seller just jumps in and provides a ton of liquidity to move this price lower, you're probably just going to rotate higher now. Let's see what happens. Running out of time to trade. That's okay. All right, we take the trades when the opportunities present themselves. We don't just trade for the sake of trading. I don't care what the P&L for the day is. Did we follow our process? Did we read the market in the way in which we wanted to read the market? Yes. We've done all those things correct. So therefore it is a good day, no matter what the P&L says. We didn't break rules. We didn't engage in low probability trading. It was pretty high probability. It just didn't work, right? Even if you had a 60% edge, with 60% edge is fairly ridiculous, right? It's kind of crazy to think a 60% edge is fairly ridiculous. That's 40 trades out of 100 that will not work. And the order in which those come, you do not know, right? You could have 10 losing trades in a row and still have a massive edge. It's crazy. But you should have some sort of quantifiable edge. And this edge primarily relies on slowed rotations, slowed volume, signs that the auction is complete, and that you're going to move into an area where the auction is incomplete. Okay, we trade back to value, and we try to trade from distribution edges or ledges. That is the crux of the edge. The additional factors like the absorption only help or take away from those probabilities. Not seeing any additional headlines at the moment. Headline releases have been mostly negative this morning. Doesn't seem the Iran war is going to come to a quick conclusion. All right, a little pickup in the rotations and the volume. We're starting to drift towards out of value. Let's see what happens when we get down here, 595s. Does the anemia continue? Do we get signs of divergence? Right, I want the last and final trade to be A+. Damn it, I don't want your Pokemon cards. Not right now. Seller divergence, not ideal. But rotationally, this is kind of what you want to be seeing, right? We're not adding a lot of volume per each rotation. The rotations are slowing down a little bit. Right, you're adding a decent amount of volume. You'll go a little bit lower, it looks like. All right, you got the buyers stepping in a little bit. This is an area I did say I'd be willing to take a trade. Right? If we can get like a 595 test, that would be ideal. Right? Because I want my stop at 591 or below. But I mean, the market is just absolutely struggling down here. Will I take 596 if I get it? Yeah, probably. Just because rotationally we're so slow down here. And we just saw the rotations up here that were so much quicker, so much more volume being built. But if it's going to do it, it's got to do it right now. right? All this futzing around the POC. It's expected, but it's not ideal for our trading environment. Was this enough to trade down here? No. You did have the slow rotations. You had the slow volume. But the fact that you were still inside value is less than ideal. And the fact that you didn't have any absorption at your back is also less than ideal. So if you have two then less than ideal factors on your trade criterion, whatever those trade criterion may be, it's a no trade. That's what takes A plus trades down into the B trades. And I like to stay in the A range. It doesn't have to be A plus, but it needs to be an A. No B's and C's for me. If we rotate down here, I mean, again, I really do want my stop at 591, not any higher. Definitely not above 593. Oh my God. Did you see that rotation into 168 that added absolutely no volume? It added no volume on the rotation into 168. Like this is absolutely looks like it's going to shoot higher. Absolutely. Can we trade it? No, we're not low enough. It stinks. But this was just anemic right here. When you rotated into a price level and added no contracts and you sat there for a second, like my goodness. All right, I'm gonna let this play out a little bit because we're in an area that I was looking to trade from. Okay, again, some seller divergence, right? So we still have several less than ideal factors not allowing us to be long just yet. We're still within value, which is less than ideal. You got the flashes of the seller divergence, also less than ideal. Still a possibility that you run those poor lows. Nine, six. And some volume here. Buyer stepping in. I am willing to put a limit buy at 595 after what I've saw. I don't know if we're gonna get back down there though. I think we'll maybe get 596. All right, let's try 596, stop at 591. See if we get filled. My target is right above the POC at 610, somewhere up here. Let's see if we get filled at 596. It ticked in, and it rotated into it, didn't fill it. Oh, stop. Still not filled. I got a limit order at 596. I'm seeing flashes of the divergence on the buy side. It might not get filled if it rocket ships without us. That stinks, but oh well. And it's just there's not a lot of volume down here. And you're getting flashes of the divergence. 596 and a quarter. Rotating the 596, please. But do so slowly. All right, we're filled. So let's fill out the log. 1057. We're long. Don't go down to my stop, bud. Stops at 91, 591. Take profit is 10. 6610. All right, so we'll move our stop. If we're in at 9.6, we're looking for 10. Oh, 03. Is that a little too much wiggle room or 02 better? And we're in at 9.6. Make it 02. Let's see what happens. We get stopped out again. We get stopped out. But is the flashes of the seller divergence right here, right back inside value is less than ideal. Sure. Right. That, yeah, shoot. We're going to get stopped. They found some volume down there. But we don't scratch the trade if we're in drawdown. That's just emotional. And stopped at 91. Yeah, oh well. And it was a clean fill at 6591. Not ideal. And close time was 10:59 at 6591. It is what it is. I mean, was that a decent trade? Yeah, I think it was pretty decent. Right, the buyers didn't hold it. We got flashes of the buyer diversions. We had the slowed rotations, the slow volume. We were outside of value. We had good targets up here where we saw the markets rotate pretty quickly earlier. So it is what it is. You know, we took the probable trade and it just didn't work. That's unfortunate, but that happens. That happens. And then watch it now just slowly rotate down and then rocket ship back up just to add so much emotional pain to it, right? That's what markets do. Emotionally, they're pretty painful. Nothing you can do about that. And if it was another news headline that came out, yeah. Can you imagine? OPEC output fell most in decades last month on war, according to a survey that came out at 10:51. So did that affect our trade? Yeah, probably not. Probably not. We're in after that. So I don't think it was really a headline driven thing. All right, that's all the way back here. Oh well. Right? We went down to those lows that didn't exactly look clean. We took 2 shots today. We missed on both shots. That's unfortunate. But did we change anything about what we do? No. Did we follow our process? Yeah, I'm pretty sure that we did. Were those high probability trades? Yeah, I'm pretty sure they were. Right. If I was to probably grade that second one, you had the slowed rotations, you had the minimum volume added. We were trading back to value. We were at a good ledge. We were outside the value range. We had a good LVA target. There was no opposing absorption, but we didn't have supportive absorption. So that's like 7 out of 8. That's an A trade. 100%. 7 out of 8. So nothing you can do about that. Sometimes you win some, sometimes you lose some, right? We manage our risk and we show up again tomorrow. That's what we do. All right, this is probably a better place to be long now. All right, you prefer edges versus ledges. Edges are always preferable. But all right, we're past the trade time for today. It is 11 o'clock. We took a couple of shots we missed. It happens. Right, but we're not going to get upset about it. We followed our process. They were good probability trades. So for all the reasons that I said, so we just got to let them go. We show up tomorrow with fresh mind, fresh look, and we'll see what happens tomorrow. All right. God bless you all. Hope you have a great Tuesday. Hope the sun is shining wherever you are in the world. It's pretty cold here in Michigan. Spring is just not here yet and keeps teasing us, but is not here yet. All right, folks. Have a good